Guys, back at it again. I am here for another market close video. It is April 26th. It's about 3:38 p.m. Market's coming into the close. We're getting a little bit of selling pressure with just a little bit less than half an hour left. We had a decent little pop on the Trump tax plan, then an immediate fat finger sell-off. That was just an obvious big flash in the security itself, in the SPYs. But I wanted to zoom out, pull it over to a weekly chart, and kind of just give you a feel for something real quick. A lot of people don't realize that the top of the tech bubble and the top of the tech bubble, which is here, the top of the credit crisis was here, basically correspond to the same level as well as their corrections did. Obviously, the financial crisis took it a little deeper than the tech crash did, but still, we're talking a matter of a couple percent here. So that's something that you really need to wrap your mind around, just the psychology behind why those two independent crises, kind of determined or expected a similar outcome. So I'm going to pull up a chart real quick on just the S&P 500 returns during the quantitative easing era. So if you can see, quantitative easing basically started at the low of 2009. I believe it was November of 2008, so let me get this out of the way. So if you can zoom in here, you can see that November of 2008, which is basically where my cursor is now, is the low. This is basically the low on the entire crashing market. That's when the Federal Reserve started buying securities in the secondary market. So you have to think, here's the chart again. So what allowed the stock market to get above this incredibly psychological level of, what is this, 160? Let me just pull up the SPX real quick just so I can get an actual number. What was the psychological barrier that allowed the stock market to climb above 1600, which clearly had been, keeping us down for literally 2 decades almost? In my opinion, it was quantitative easing. It's as simple as that. I think the stock market finally realized that everything was too big to fail. There was never going to be an issue where a big bank like Lehman would go underwater seemingly overnight through a trading session, basically. What did it open at? 100 and closed at like $2 that day? Forget the actual numbers. I could be way off, but you get the point. I'm gonna couple this chart with just a long-term view of gold. So bear with me a second. There we have the SPYs. And now let's pull up a gold chart. And this is also another striking, interesting point. So let's pull up a monthly chart. You can see there really was no tremendous shakeout in gold when the tech stocks really collapsed. Gold really didn't react. Gold had been on the up and up since then, though. So that seems to be the catalyst that really got gold up and running. It really didn't. It had a very minor pullback during the financial crisis of 2008, 2009. But I think gold has been keeping up with the amount of quantitative easing being spent and purchased over the secondary market for years now. I think gold is the only truly fundamental, not necessarily fundamental, but psychologically fundamental security out there that trades one for one with a lot of these silly correlated asset classes. But I don't know. I really don't know. This is uncharted territory for the most part. I'm sure there are a lot of hedge funds, a lot of big institutions who have no idea what's happening right now. So I defer to the experts. I'm sitting on the sidelines. I have a small position in gold. I'm doing nothing drastic at the moment. I'm nowhere near full size. But let's move away from the SPYs. Let's pull up crude. Crude is something that I haven't talked about on this YouTube series yet, but I'd like to mention it. If you can see, let me pull up a monthly chart. We're at an interesting level. We're at a very interesting level. I'm sorry. Let's pull up the weekly. If you can really see the variability in the price of oil, this is a market that is dominated by the conglomerates and the institutions of the world. I don't really see how there's an edge trading it. I don't typically trade oil. I try to stay the hell away because, let's be real, I'm a dude in New York City with a trading account. I'm not a Saudi billionaire who sits on barrels of oil and can decide to shut off a well one day, sending the price of oil skyrocketing. So you really just don't know. There's a lot of variability in the contract itself. But what I can see and identify is this clear channel. So we're trading within this triangle here. As you can see from the bottom of, what is this? This is February 8th of last year. we've slowly been moving higher highs, higher lows, higher highs. So technically speaking, we're trending higher. If crude were to really collapse below back the 46, 45 level, then you could argue that the trade higher is over. I think that this thing is nickel and diming its way up. I'm not entirely sure it's with a lot of strength. In fact, I know it's not with a lot of strength. I know there's a lot of hesitance, especially with Donald Trump in office right now. So I doubt investors feel very comfortable about going max size in a commodity such as oil, which is basically what runs the world, especially America. America is an oil company with 50 states. That's how I like to look at it. It's an oil company with 50 different offices. And if oil goes down drastically and has very poor performance, and we get boxed out by some of the Saudi nations, that can really affect our nation's growth. And so, towards the end of Obama's reign, I think that was the issue. I think a lot of the Saudis were just, bite your nose to spite your face, whatever that expression is. I think they were kind of pulling a fast one on Obama there, trying to make it seem as if there was weakness when there was really just, overall grand manipulation. That's a common theme in the stock market, just pure corrupt rigging and manipulating of certain asset classes and securities. So that's why it's wise to, really have a feel for how things are related, how asset classes trade with one another. That's a very valuable skill, and it's something that you need to spend a lot of time kind of trying to figure out. But let's jump away from crude, and real quick, let's run through U.S. Steel. This stock has had its worst day ever. Worst day ever since the company went public like 400 years ago. I'm kidding, obviously. It's a very old company. I believe this was one of the Rockefellers or the Carnegie guys. They basically started this stock. It's been around since. But this is just another classic example of the Trump bump gone awry. If you can see, it's just been irrational exuberance on the way up since Trump got into office. We had a little pullback here, then another little pop, and then we've just been on the down and down. In my opinion, what happened was investors bid this stock up too high. They reported earnings after the bell yesterday, and their numbers just couldn't justify their market price. So the stock is sent down 27% right now. For a large listed name like United States Steel, that's a scary move in a stock. It's a very scary move. It kind of just exemplifies the irrationality of the markets, I guess you could say. So you really, as one of the most secure, pure steel stocks on the market, you wouldn't expect a company with such easily projected revenues to miss on such a level that sends the stock down 27%. So that's just another reason to be very careful. It's another reason to maybe even consider selling stocks. Who knows? I'm not too sure that we are going to be able to get above these highs here in the SPY. Again, we're hitting more selling right now with 14 minutes to go on the day. Let's pull up this chart. Yeah, we're at the lows of the day actually in the SPYs. Let's see if we can crack 2385. That seems to be the big level from this morning. But all in all, interesting day. Tested the highs. We were maybe a quarter point away, not far. Didn't do it. We've run a tremendous amount over the last few days. I would be careful. I wouldn't go gun ho. I'd be a little gun shy. Maybe scale out of a position, take some profits. This is definitely a time. I wouldn't want to be fully invested or be fully investing at the top where we're at right now. But that's all I've got. If you guys have any suggestions on stocks I should be covering, please comment them down below. I'm always open for suggestions. And if there's any criticism or comments you have for me, leave them down below. Don't be a dick. But, let me know how I did. Thanks, guys. Later.